Welcome to the Financial Technology Report, a leading information source on financial technology companies and solutions. In this episode, we speak with John Fees, co-founder and CEO of GradGuard, an embedded insurance platform built for the collegiate market. GradGuard works with more than 700 colleges and universities to embed tuition and renters insurance directly into the enrollment and billing process. By clearly explaining refund policies at the moment families are making financial decisions, the platform protects students from financial losses due to unexpected illness, injury, or mental health challenges. Prior to GradGuard, John built multiple companies at the intersection of higher education, financial services, and technology, including Y2M, a college media and student lending platform later acquired by Viacom's MTV Networks. I'm your host, RJ Lumba. We hope you enjoy the show. If you like the episode, click to follow. John, thanks so much for taking the time. It's a delight to be with you.
Thanks, RJ. Appreciate it.
Interested to learn more about GradGuard. Obviously, we're quite familiar with the company, but you never really know it until you talk to the founder and leader of it. But you're in a super interesting space. Maybe to kick off, how did you decide to go into this space in particular?
Well, I wasn't an insurance guy. I was more of a fintech technologist and had built a couple of other businesses in and around the university space. And really, I took a step back after having sold our first companies and looked at kind of the problems of paying for college. And so much of the media is focused on overborrowing and student loans and those problems. But the reality is the problem we went out to solve is that the real problems with student debt isn't that people have borrowed too much. It's that if you don't graduate, you have a very difficult time repaying. And so when you look at the people that default on student loans, there's students who basically did not graduate. 80% of student loans that default are from students who didn't finish. And when you look at it even more closely, you realize that the issues around why students don't graduate are insurable. It's mental health issues, it's death of a parent, it's mono, it's a concussion, it's a variety of things that disrupt your education. And then if you start to peel that back further, there's other risks that impact this generation that if your computer or backpack gets stolen or gets damaged, those types of things disrupt your whole semester. And to be honest, this generation doesn't have the same resilience and the same skills that maybe you and I did growing up. And so it just disrupts their whole education. When you put it in the context of the cost of college, it ends up being that college is the second largest investment most families make, but there's traditionally been no way to protect that investment. And today, but for GradGuard, there's no real national solution that gives your money back when something bad happens to a student and that student has to withdraw, or other types of risks that might emerge in a student's life.
And you have some big universities that you're partnered with. I was just checking in and I saw that University of Michigan works with you.
Michigan, UCLA. I'm really proud of our network of schools. The best technology, in my opinion, creates a public good. And really, our technology platform is what makes it possible for students at Harvard to Princeton to Vanderbilt to UCLA to Berkeley to Michigan to Ohio State to my own alma mater, Arizona State. Virtually every school in the country has access to our programs. One of the difficulties of building a business like ours is our insurance is very inexpensive. Our average policy is $170, so it's very inexpensive to buy, but that's only because we don't spend a lot of money on marketing. We actually don't market at all. We promote it within the build process, and we help schools disclose the limits of liability of the school, disclose the refund policy. You might think Princeton's going to give you 100% of your money back if you leave because you get mono, but they don't. Harvard doesn't, Arizona State doesn't, UCLA doesn't. And if you can't afford the cost of an extra semester, you're smart to consider GradGuard. And the schools that work with us are deeply committed to that.
And on the other side of the equation, who's actually underwriting this?
Yeah, so we work with Allianz, which is the largest insurance company in the world. You probably see an offer for travel insurance periodically by Allianz. They're terrific. We also work with Markel and AmTrust as two other big insurance providers. So if we had claims from all of the almost 500,000 students we protect, we'd have over $2 billion of claims. And so you have to rely on an insurance company that's got a balance sheet that can pay all those. During COVID, we maintained coverage for students that got sick with COVID and needed to leave school. I'm really proud, again, because we have the right spread of risk. We have students from New Jersey to Pennsylvania to Ohio to Arizona. It's the right spread of risk to do this affordably and provide the coverage students need and benefit from. Now, sometimes people will say, well, you don't really need tuition insurance, but I think that's uninformed point of view. We know because of the number of claims we pay that this is necessary, but there's also data from the National Student Clearinghouse that just in 2023, there are 113,000 students left school prematurely, including for medical reasons. Well, if every one of those students spent a modest $20,000, it's $2 billion of losses, $2 billion of families did not get back from their schools. But for GradGuard, there's really no way to protect yourself.
Hmm. I'd like to kind of switch gears for a little bit because we
Yeah.
were talking, before we hit record here, and you've got a history of founding companies and building them. Maybe for the benefit of our audience, tell us about your first company that you founded.
Yeah, I spent my time at the intersection of universities, higher education primarily, and then technology and financial services. And my wife was an academic and took us to Boston. And my first company sought to create a national network of university newspapers and alumni magazines. We ultimately built that business at almost every university in the country back in 2000. Had a website, but they couldn't easily manage it. So we built a content management system, a SaaS platform. And on top of that, we built a private ad network. So companies like Apple and Ford and Samsung that wanted to reach college students, we were the one place you could go to do that. Now, today you've got Facebook and you've got Meta and TikTok and all these other places to reach college students and alumni. But at that moment in time, it was particularly valuable. The other thing we did is we built a large student loan origination software business on top of it. So there's only so many beer ads and pizza ads you can sell online and in newspapers. But what we knew is that students needed a choice. And we created a student loan platform that gave students a choice. So traditionally in the student lending world, you could only get the loans that were provided or recommended by the school. That all changed when the federal government kind of nationalized the programs. But in the 2000s, our business and the platform we promoted was a little bit like Lending Tree for college students that needed to get a choice. And we provided choice. And we did that through our college newspapers and an early partnership with Facebook.
And so 2016 or so rolls around and you're like, oh, there's a gap in the market in insurance. Is that kind of what happened? You didn't see like a very competitive marketplace there?
Well, the insurance world is very complicated. We're called an MGA, we're a managing general agent. The value we create is we deliver the consumer experience and we're licensed as an insurance producer, which doesn't mean we're a broker. We design a program that's deliberately unique for its marketplace and the needs of our students and schools. So the tuition insurance product we built, we identified health data, we underwrote a product, and we took that model to the insurance companies we work with. And that model is what they use to then create a product and gave us exclusive distribution rights. So we basically built the product. We just don't take the risk associated with it. Our renter's insurance program is very similar. Tuition insurance was unique in that nobody had offered a national program before. On renter's insurance, there's a lot of renter's insurance companies, but most of them have limitations that apply to students that are not great. You got to maintain your address. You have a $500 deductible. It's a year plan instead of a monthly plan. There's all these different things that kind of give insurance a bad reputation. There's all these gotchas. My favorite one to point out is there's, besides maintaining your address, which students don't do, you had coverage in that dorm, but not that one. That's exactly why we built our product, so you don't have those problems. Another one is electronics limitations. Typically, a standard renter's insurance product will only give you $1,500 for electronics. So if your backpack gets stolen with $3,000, you thought you had coverage, but you don't. Again, GradGuard doesn't work that way, in part because we work with schools and schools expect it to work with no gotchas. And it doesn't matter if you move to a different dorm, you still have coverage. And so it's been an interesting journey because the insurance world, has been limited, A, because it's very highly regulated in all 50 states. And secondly, the products aren't necessarily a fit for what college students and their families need. So we had to design our own programs. And it's working. I really feel good about the work we do. The goal for us is not to sell insurance. The goal is to help students complete their degree that they're investing in and make certain that they can overcome, whether it be a backpack being stolen or mono or a concussion or even the job loss of a parent. We cover those reasons as reasons that might disrupt your education.
And when you partner with a given university, are you the only vendor for insurance?
Yeah, we're the only partner, but think about it like employee benefits. Employee benefits work because they're being recommended to you and you have direct deposit from your employer to purchase those things. We do the same thing with universities. We provide GradGuard's tuition and renters programs as a benefit. So they have preferred pricing, preferred coverage that's not generally available. Although you can go to gradguard.com, the primary way our business works is we're embedded in the enrollment process. So that makes the product affordable, but it also creates the right spread of risk so that you give every student the opportunity to make that decision. For your audience, I think the really interesting thing about embedded fintech programs is that it's creating a new opportunity to reconsider process design. When you think about the best technology, they're designed very, very thoughtfully about the entire checkout process. Within universities, a lot of these decisions never existed before. So you didn't know what the refund policy of the school was. You didn't know you weren't going to get your money back. What GradGuard's done is we don't just offer tuition insurance, we offer the education. We offer the school the ability to disclose its refund policy, make certain that the students are fully informed, and then we give them an active choice. It's not an opt-out, it's a choice. And what I like to point out is think about the decisions we're not being asked to make. Those are often where the greatest risks are in our lives. And when you're not asked to protect your investment in college, you don't know that it's at risk. And when you're going to Duke, that's almost $100,000 a year. And even in Arizona State or Boulder, every school is practically expensive at this point. So I don't know many people that can afford to lose $10,000 or $15,000, let alone 40 or 50,000. And that's why we feel good about it. By the way, the evidence for our mission and why we're doing a good job is that over 75% of the students we paid claims to return to re-enroll in school. And
Mhm.
so that to me is a measure of success. Are we really helping families accomplish their goal, which is to complete their college degree?
What are the most common claims for why a student leaves? Is it mental health?
Mental health is number one. This generation has got more anxiety. They're more clinically trained and aware than we were growing up as well. I think that it's a real severe problem for society and it's going to enter our workforce as well. A lot of young people are really debilitated by anxiety and depression. And I think that one of the things that compounds that in higher education is the financial loss. So you can become even more depressed when you realize this is not a good fit for me. I'm anxious. I can't go to class. And then all of a sudden you compound that with this, oh no, I'm going to lose $25,000 of my parents' college savings or something like that.
Mm.
That compounding piece is what we really focus on. A lot of our effort is to really reduce the financial stress on families, reduce the financial stress on that student. When you have a student, I've got 3 in college. When you have a student that has a crisis, it could be a roommate problem, it could be they're depressed, it could be any number of things. You're not really worried about the financial loss at that moment. You're worried about the well-being of your student. And that's really what GradGuard enables is that do what's in the best interest of your student. And if that means coming home mid-semester, then do that. The well-being of your student is really the most important feature. By the way, the number one cause of death of young people today is from suicide. And so we have to really think about the systems we've designed and how we relieve stress on these young people. And I think GradGuard's a part of that. There's the work of the JED Foundation. There's a lot of really important work that's being done by schools to identify those students that are at risk. For instance, are the students eating on their meal plan? Are they attending classes? You're seeing more colleges today take attendance because that is a measure of kind of your own health and well-being. And if you're not showing up to class, you're probably at risk of leaving as well.
And thinking of your overall market, does this include graduate schools?
Yes, we insure international students, graduate students, and if you have any underlying health issue, so for instance, Crohn's disease or any number of chronic health conditions, you're covered. If you're well enough to start school, our tuition insurance will still provide coverage for you. So for instance, you're pregnant and you're expected to be able to deliver the baby, post semester, but maybe that's not the case and you have to leave early. Well, we'll give your money back, even though because you're well enough to start school. I use pregnancy as a case because my wife, when she was finishing her PhD, was pregnant. And so it's like a real life example. She didn't have to go on bed rest, but if she did, she would have really struggled to finish the program.
And in terms of growth, I presume there's an uptick in, say, when you're onboarded with a particular university, maybe in the first year you have, X number of students, but then it gradually increases, I presume, along the way.
Yeah, it's a good question. It actually grows more rapidly over 3 years because when you start a program, the entering class are those that become most aware of it. And then we pay claims. And by paying claims, that creates word of mouth that really demonstrates this is real. But the juniors and seniors who never saw the offer as a freshman, they've never really, do I need this? They don't understand it frequently. So it's by the year 3 is when we start to see really high levels of participation. We have schools with purchase rates and participation rates over 60%, and we have schools that are in the low single digits. But a lot of that tends to be related to how the school embraces it. Do they talk about it during orientation? Do they talk about it during move-in? These types of moments, most schools don't want to talk about bad things happening to students, but the schools we work with have embraced the reality is that you can't predict when those things will happen or which student will happen to, but this is a level of protection that is worth considering.
And in terms of number of schools you're working with, is there much more room to run beyond the 700?
There's about 2,000 schools we believe will reach about 90% of the market. There's 20 million college students in the country, 12 million undergraduates. We are very, very committed to kind of focusing on that. Right now, we reach about a third of the market with our 700 schools. There's still schools that we should absolutely work with. And the indifference by the schools that are not already working with us is because it's a complicated decision process on a campus. If you call the housing office or the bursar and you talk to them about insurance, they'll say, well, we can't make a decision about insurance. You got to go to the risk management office. So you go to the risk management office, but they're worried about workers' comp. And if you're at MIT, a nuclear facility, they're worried about cyber attacks. They're worried about big, big problems. And so when you think about enrollment revenue or student housing fires, you're not thinking about these things carefully. So it just takes time to educate the market as to why we do it. And the other thing is we don't pay schools. We pay claims. We want the price of our products to be so affordable that every student can afford these programs. And, if you had to pay schools, it would just increase the cost. So the schools that embrace this are really the ones I believe are taking an initiative to say that they care and they demonstrate that care by offering it, just like employers that provide employee benefits.
We're coming up on the tail end of the conversation. I've got two final questions. One is, can you tell us about a person who's had a profound influence on you?
My father, certainly because of Father's Day, but I'll say why. My dad was a school teacher and ultimately a school administrator. I was the youngest of 5 kids. And he always told me there are always those who know how, working with those who know why. And I think the most important thing when you build business is to know your why. And our why is not to sell insurance. Our why is to help students overcome the things that will disrupt their education. It required a major investment in our technology platform to do that. And it's really just motivated by the why, not so much the how.
Last question. Can you tell us about a charity, cause, or other endeavor that you're passionate about?
I'm very passionate about the JED Foundation. The JED Foundation, I just went to their gala in New York. It's the largest organization. McKinsey Scott just made a major gift to it to reduce the suicides of college and young people, specifically college students. We do an event here for them in Phoenix, and we've done it very successfully. But I think the most important thing is bringing awareness to the things we can do to promote the mental health of college students. And JED is doing great work. They partner with universities. They have over 600 partners that universities have embraced their model. And I think it's vital. It's really actually, if you're listening and you've got a college student, you should ask for your school, do they work with JED? Because if they do, they've created a set of systems that are going to help assure your student is well cared for and probably over time cared for, especially if they're in a moment of distress.
Excellent. Well, John, I want to thank you again for taking the time. It's been a great conversation.
Thanks, RJ.